Start. Okay, welcome everyone onto today's session. Today I will be going over smart money concept, and the main purpose of this call is to break down the concepts based on the things that we've already studied from Wednesday, Thursday, and Friday. The reason why I see it necessary to do this at this time is because this is going to fit in exactly with the stuff that you have already learned. And it is very significant for you to know this because it will be the game changing concept that you probably will be waiting for all this while. Most of the time, we do tell people wait for a break of market structure and then pull your fib 50% and above if it is retracement, then you sell 50% and above if it is below correction, then yeah, you leave the trade. Today is probably going to fit in a different way. You might like it, you might not like it, because going back on your own charts and some of the trades you're probably taking is going to feel like, how did I not know this? And I'm serious about it because it happened to me. After I realized this concept, I went back on my charts and then I started marking up and marking up backtest and backtest, and then I realized, okay, so why did I got this trade wrong? Because everything seemed so clean, but I still got it wrong. And the problem I realized was that I like to focus my attention most of the time on the smaller time frame, forgetting what is happening on the higher time frame. Maybe you're on this call, you've got the same problem. You realize that people are using 5 pip stop loss, 10 pip stop loss, and so good, right? In terms of risk management, I think that's the best thing to do. But then think about it this way. Why would you be taking trades with 10 pip stop loss and not knowing the true direction of the market? It's just putting yourself on the line to be taken for granted. And that's what the market does all the time. And one more thing that I realized is that I did not focus my attention as to where money has been taken. I'm speaking in terms of smart money. So if I say where money has been taken, what I mean by that is liquidity. You might be on this call and you completely have no idea about what liquidity is. I will be talking about liquidity. And one more thing that I realize is that after I have identified the trend on a smaller time frame, I don't go back onto my higher time frame to make sure that it actually fits in to the shape of the higher time frame. Because although it takes very little steps to generate the bigger picture, but once the bigger picture is there, that is what's going to determine the overall route. It's like having a motorway and other leading ways joining the motorway. And that is exactly how it is for most of the people who thinks trading is just about focusing on one time frame and then catching your trades. Of course, it might be working for you, but it didn't work for me at the start. You're probably on this call thinking, oh, I think I'm the same. It's not really working for me. Then you're on the right call. It might seem I'm talking too much, but then the words I'm speaking right now is part of the things that I'm supposed to teach. So if you took notes, good. If you didn't, then probably you should wait. If it comes back again, then fine. The main thing that I wanted to talk about is the concept of market structure. I'm just going to quickly wrap what we did on Wednesday. So on Wednesday, we said we could have a structure moving from the bottom like that, creating what? Higher highs and higher lows. We did talk about something like that this could be happen. And we also said that whenever price was going above areas like this, we call price as breaking market structure, which in this case, I'm going to be representing it with BMS. I most of the time use BOS, but today I will be using BMS. Take note of it. I did say that whenever price goes above here, it means that we had break a market structure. Once again, if price goes above, oh no. Once again, if price goes above this area, there is another form of break or market structure. And I did say that when we see this, this is the best area to enter for our trades. This is the high probability trades. However, I did not tell you about why it is the high probability trade and how to enter. I did not tell you. All I said was pull your fib. If it is a retracement, you're good to take the trade. But today we will be going a little bit into detail and I will be showing exactly what you need. After you have seen the retracement, what confirmations you need to take the trade. And this is the reason why I said this is going to be a game changer. You probably understood the structure of market already. You probably understood that if we're forming higher highs and higher lows, you'll be taking your trades in a buy position. You probably knew that already. But then the thing is, what gives you the confirmation to take the trade? And that is what I'm about to talk about. Okay, look around this area. As we are continuing to form the highs, it will get to a point that we will see price starting to slow down. I don't know, some of you on this call probably get used to this. And I always say something about markets forming some sort of sideways consolidation on the upside or on the downside. I always signify them with a structure on my RSI as this, and then I label it as divergence. It might not make sense to you because I'm using lines, but if I go to the actual chart, they will start coming into place. And this happens every time price rallies up. Every time price make a move up or it makes a solid move down. What do I mean by that? An expansion in market price or an impulsive move, an impulsive market move. After every single expansion of or after every single impulsive move, we are going to have that particular thing. It happens. The only time that we're not going to be seeing this shape or this pattern play out is when there is a news event. And as we always say, news is an excuse to move price in the direction of smart money. News is just an excuse to speed up the rate at which price will move into the direction smart money is already targeting. And whenever we have this sort of divergence, we expect price to continue forming higher highs and higher lows. In the case when we fail to create a higher high, at this point in time when we fail to create a higher high, this is a signal telling you that price is getting ready to do something different that you're already seeing. And what do I mean by that? We usually see price create this. And in that case, what happens around this area is a break of market structure. At that point in time, that is what we see. We see a break in market structure. And what is the break of market structure I'm talking about? Is a break in market structure to the downside. That is the reason why on this line chart, I've represented it with a red mark. On the upside, we were going in black lines. But on the downside, we are moving in reds. So take notes of that. Now that we have the break in market structure, all we need to understand is that the trend has changed and now we need a retracement to the upside to either the zone that I spoke about, the retracement. We need a minimum retracement, 50%. And at that point in time, we can take price down. And this shows how price completely finishes. This area can be described as a Wyckoff distribution formation. It can be described as so many things. Everybody has got a different name for it. The names and the complication does not matter. The structure that is being created is the most important thing. I see people all the time focusing and asking so many questions. How can I learn this? How can I learn this strategy? So many significant and big names. The question is, if you know all those big names and you don't even understand the structure of the market, what is the point? It is key to be able to identify this shape that I've given you right here. If I were you, I'd probably be taking screenshots and pasting it in front of my computer every single time I'm going to trade and make sure that I see this shape. If I don't have it, it means I do not have a trade. Now, after we've been able to take the trade from here, we know that we are having our TP1 over here, our TP2, just like I gave the FIB levels. You can go as far as the 1.618 level to take your final TP. But as price begin to create the divergence and create the small higher highs and higher lows, we wait for this area, and this area is this slope right here is very significant. It is very significant. And that is when we realize that we failed to create a new higher high, and then we can consider price moving down. It is not confirmed. You cannot sell from this area, and I'm going to repeat this. You cannot sell from that area. And the reason why you cannot sell from that area is because pricing is not confirmed. The sell pricing is not confirmed. What if you take the trade from here and price retraces down here and it continues up? What would you do? At that point in time, would you have somebody to blame? And most of the time, this is the kind of trades that people are taking. Do I have people following me? Can I have a 2 in the chat box if I'm making myself clear? What do you want me to explain again, please? Who is it? Karina. So it is very important to understand where you're taking the trade from. Personally, the bit where you mentioned where people take the trade versus where you should. Okay, so I said in this area, you do not take the trade. And the reason is that the sell has not been confirmed. If you take the trade from here, price is capable of doing a small correction and just moving up again to create a high. However, if we know that this area is the last higher low formation that created this area, then we expect price to come below it to confirm that now we can pick up a sell trade. Does that make things better for you? All right, brilliant. So now that we understand that we need that break right here, it is very key. For me personally, I call this area the alpha break. I call it the alpha break. If you're able to catch a trade from the alpha break stretch expansion, that would be the best trade you would have in the whole week. If it is on the weekly time frame, you probably ride that trade for almost 3 to 4 weeks. And this is how people manage to stay in trade for too long. And you're wondering, oh, Francis, how long have you been in the trade for? It can be as long as it can, as far as I can identify a proper break alpha break. Alpha break is in no books. It's been in no book at all. Nobody has made mention of alpha break. So it is Francis's. You can create your own break, however you think about it. In this break area, this particular leg, I am going to change this color actually. Let's make it green. Oh, green is very bad. Let's make it blue. What time frame does this tend to work best? I want you to be able to look at these things on a daily time frame, 4-hour time frame, minimum 2-hour time frame. Do not go below that, because this will give you the proper trade. It will give you the best possible trades. Do not go below 2-hour time frame. No, 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 no. You should be able to see this picture on a weekly, on the monthly, on the daily, on the 4-hour, on a 2-hour minimum. Do not go below the 2-hour. And I know why I'm saying that. Seeing a setup on a 2-hour is going to cost you a lot. 2-hour, I tend to be very careful because I know that the price action is not so clear for me. I'd rather want to see you on the 4-hour and scale down to probably a 30-minute or 15 minutes for my entry. So this area right here is very key, guys. And now, once I have this area, I'm going to tell you one secret. I expect price to go to 50%. I expect price to go to 61.8%. I expect price to go to 71%. At the most, I expect price to reach 79%. If price go past 79%, I know that that trade is invalid. I'm not going to take it. I'm going to repeat myself again. This retracement right here, I need it at 50%, 61.8%, 71%, 79%. And after that, I don't need price to go any further for the reversal. We need it to happen up there. So as I have mentioned, if I can identify, now I'm coming into institution. If I can identify an institutional candlestick at the 50%, at the 61.8%, at the 71%, or at the 79%, that is where I will be taking my trade from. And I so I said, seeing an institutional candlestick at the 50%, 61%, 71%, and then 79% at that point in time, that is where you're going to choose to take your trades. And the question I always get the most when people are asking me this question, okay, Francis, I want to take the trade at 50%, but then I see an imbalance at the 61%. I see an imbalance at the 71%. I see an imbalance at the 88%. What should I do? Today is going to crack it for you. After this call, you should know exactly where to pick your trades. All right, let me stop talking and then go on, go on to the chart. So it's the same shape, really. If price is heading to the downside, again, the same thing we'll be looking for. We expect price to be heading to the upside, do the retracement, continue to the downside. And again, as it's reaching the bottom area, we want to be seeing price do a short highs, low, highs, lows. And in this area, once again, we want to see that divergence thing. And from there, again, we want to break above. And this will repeat again. And this leg right here will repeat itself again. So this is the shape that you need. If you're not seeing any of this, your reversal is not happening. Just join the trade. Continue joining the trade. Join the trend that you already have. If you haven't seen this, continue to join the buy. If you haven't seen this, continue to join the sell. Sell, 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 sell until you're tired. Well, it is funny until you're on the charts. Is everything I've said so far completely clear? Because believe me, if you get to know this, yeah, you probably wouldn't have to put on all the harmonic patterns I said. Just get it right. Know the area you're within it. The harmonic pattern becomes an extra confirmation if it lines up with the area you're looking for. And this is why I say to myself, I trade harmonics with smart money, because the harmonics is the, let's say, the icing on the cake to the components that I have identified on my smart money charts. The thing is, when I post my charts, I do not show my smart money areas. I only show you the harmonics areas. Why? Because I am wishing that somebody will actually, I don't know what to say. Somebody will actually take the time to work out why this guy is getting the reversals over here by my trading. You need to be able to dig deeper in your own self. Nana told me that, Francis, to every level that you get to, there is always a step further. And he says this on the call every single time. He does say this every single time. Do not be satisfied with where you are. Learn, 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 learn. Actually, let's get on the chats and let's blow some minds. You tried but couldn't crack the code. All right, let's see if you can crack it after today. Let's get on the chats. Anybody want a screenshot to this before I leave? Anybody want to take a screenshot before I leave? Okay, I'm gonna take the picture, copy, and then I'll send it to the group chat. Now let's clear this completely and go on to the chat. So focus your attention around this area. See what was happening around here. Price was creating higher highs, lower highs, higher highs, lower highs, higher high. And around this area, something happened. We broke market structure. And before the break of market structure, look what happened. And this is a monthly time frame. And now look what happened after we broke the market structure. We just dipped down so quick. If I pull my fib from here to there, we're not quite at the premium area. So I can promise you that as time goes on, we are going to be seeing GBP coming up here again. It will happen. We haven't even done that yet. So that is a clean setup waiting for the future. And look at what's significant about this area. Imbalance, and this place is so beautiful. Look around here, drop, base, and a drop. So every single person that trades supply and demand has got the attention over here. And they know it. I think I have a supply and demand trader on Discord, don't I? Mr. OJ. Yes, I think he's there. He can confirm it for me. That's it. In the chat box, he did. So every supply and demand trader has got their eyes over here for long term. Whenever GBP USD comes into that area, they need that trade. All right, we might not be seeing so much on here. Let's look down here. This is just the beginning, guys. It's just the beginning. Look at down here. Again, as price was about to reverse, look at that. And look at this. What is down here? Divergence again. Price was moving highly, drop, retrace, drop, retrace, drop, retrace. And when it got to here, slow movement. And the most significant thing about it is that when price got to this area, we swept liquidity. And what do I mean by the liquidity? This is an all-time low at that point in time when price came underneath. You would be surprised that if I should go on a lower time frame, this area around here, there was a trade inside that area. Let's go on the weekly and see what happened. So when we swept the liquidity, look what happened. We came all the way down, swept it, tapped into it, and boom, we left. Since then, we broke the market structure over here because this was a sell, the sell right there. That came to sweep liquidity. Where did we break the structure? Up here. And since then, we have not returned. We have another trade waiting on a long term down here waiting for us. And this will go on and on and on and on. If you look up here, the same thing happened. Look down. And since then, we started forming lows. We can dig detail into this area when we go on smaller time frame and you see what's happening here. Before this reversal, once again, look. And what happened before price went up? We swept liquidity. That's the key thing I want you to see. Once again, look. Before price was about to go up, what happened? We swept liquidity. I'm doing all the sells, and after that, I'll show you the buys. Look, before price was about to go up, what happened? We swept liquidity. Before price was about to go up here, what happened? We swept liquidity. Before price was about to go up here, what happened? I'm going to go a lot detail in here for you to see what's happening here. We swept liquidity. And I can point it all out to you. Look at here, before we went up, liquidity swept. Before we went up, liquidity swept. Before we went up, liquidity swept. I am giving you the trick that happens every single time in the market. So somebody is asking, what is liquidity? Just imagine this shape. There is money here. Just imagine, the reason why there is money here is because as far as price came down, it means that somebody sold. Think about it this way. The same way as far as money went up here, it means that somebody bought. So there is money sitting here. So in this case, this is liquidity. This is liquidity. Again, imagine this. As far as we have retail traders existing, and I know for a fact those who trade M's and W even up until now, so money exists up here because they were able to push price down. So this is liquidity. This is the shapes that I want you to see when we talk about liquidity. And this is to the upside. Let's talk about the downsides. For the fact that we were able to push price from this bottom area to the upside, it means that somebody bought here, and now it's their turn for them to be taking out the trade. Does this explain correctly what liquidity is for everybody on this call? I'm going to show you one more thing in terms of liquidity before we leave. So if I have a candlestick like this, and then this whole candlestick is a daily candle, this area where the daily candle finished, there is liquidity sitting here. And where the daily candle reversed, there is liquidity sitting here. And this applies to every single daily candle, weekly candle, and monthly candle. This applies to every single daily candle, weekly candle, and monthly candle. So liquidity is spread around everywhere in the market because this is what's going to move the money, and this is what's going to move price, high, lows, or opens and close. Well, I say look at the highs and look at the lows. That's it. The opens and close are for some another day. That belongs to me for now. All right. So as I said, now I pointed out to you every single place where price did the same exact thing before it reversed. Look around this area. Before price was going to do the total dip, look what happened. We went above liquidity and we dropped. Look around here. Before the price was about to do the dip, we ran above the liquidity and we dropped. Before price was about to dip here, we ran above the liquidity and we dropped. And if I go on smaller time frame, you see that when we dropped, look around here, we broke the structure, rallied back up into an institutional candlestick and price dropped. And that is the symbol that I'm going to be showing you over and over and over again on this call. But for now, I just want you to focus on the fact where liquidity has to be taken before price move. We run liquidity. This is the shape I showed you, the M. Run it and drop. Oh my God, look at this. Look at this beauty in the market everywhere. Showing you the picture everywhere. Look around here. And your eyes should be able to pick these things up every single time. You should see them like a picture print. Look at this. We swapped the liquidity, broke the market structure, dropped down into where institutional candlestick and rallied up. I'm giving you the keys. If you're taking notes already, then you know exactly what I'm saying already. We swapped liquidity, broke market structure, rallied up into an institutional candlestick, and we dropped. I don't know if somebody is catching this yet. Swap liquidity, rallied up back into an institutional candlestick. You can't see it, but if I go on a smaller time frame, I can point it out to you. It is. And we rallied up. Basically, before every impulsive movement, banks will need to grab liquidity. It is a must. If liquidity grab has not occurred, my brother, my sister, you don't have a trade. You do not have a trade. You can only take a trade where liquidity grab has occurred. Now I'm going to go on a daily time frame, and everywhere I have marked up, if we can see it on the daily, we're going to see a lot more detail. So see what happened in this area as we're rallying up. Nicely going up. Now we broke the structure, and nice, we're heading back inside that area. So that should tell you exactly what is about to happen on GU. We swept the liquidity over here, broke the structure over here, and we haven't returned to this area. And what is sitting here? Imbalance. What is sitting here? Imbalance. This area is a key area. So Lloyd, on the call right now, you asked me a question, Francis, where do I think GU is going? That is the overall target, what is coming first. This is where I want to see a total drop in GU. Until then, I am still going to follow the trend. Catch the buys, catch the buys, catch the buys. And the picture is clearer as you're going into detail. Look around this area. We captured liquidity. And what happened? Break of market structure. And see, if I should put the fib on, look at the numbers. What number is that? And this is the area I said to you, take your trade from. Simple as that. Simple as that. 50%, 62%, I said 61.8. But this fib setting is my special settings I use in trading smart money concept. If you want to copy it, you can do so. In terms of smart money, I round my figures up. So instead of 61.8, I'll do 62, 70, 71%, I'll do 70.5, and then my 78.6, I do 79. Because I want to reduce my risk as much as possible, depending on how many times I've tried my fib levels. And this is the trades that you want to be taking. You take the trade from here. And look what's nice about this area. What is sitting here? Institutional candlestick sitting right there. Price came back into it, and boom, we're gone. Once again, look at here. We swept liquidity, broke market structure. Now look at the retracement. What level are we? You might be thinking, how why is he bragging about it? He's not being honest. He don't know what he's talking about. He don't know what he's talking about. I am showing you from exactly the pair that somebody picked for me, and this is what happens. This is what happens. Let's go even on the 4-hour time frame where we may see more setups. See, from here, we swept the liquidity, broke the market structure, came into the 50% area, and we dived up. Let's use here as an example, this area, this very area as an example. Let's put it in the color box. Actually, let's stretch it up. Here. Can everybody see where I've shaded blue? It might be too blue. Let's reduce it a little bit. But yeah, everything in the box. Focus on everything in the box. This area we were forming what? Lows, 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 lows. As we got to this area, what happened? Divergence. And what happened? We swept liquidity. On my RSI, this is what I want to be seen in that area where there's divergence. As price is heading down, I want to see my divergence heading top. Now, where did the break of market structure happen? Here. This is the last high that formed this low. And now let's pull our fib from this low to the very high. And where did price reverse from? Tell me, guys. Is somebody grasping something on this call right now? Once again, look around this area. As we were forming highs, we got here, the speed was reduced. Now look at the shape. Heading up slowly, heading up slowly. And look at what's happening on here. From here to here, divergence. Now look, when we got to this point, the last thing that happened, which is so funny, that I'm always talking about, liquidity grab. Now, this was the last low that formed this high. So break of market structure there. Now let's look at the retracement that happened. What level is it? And what is significant about this 71 area is an imbalance fail. We failed an imbalance right here. We failed an imbalance right there. And since then, price just dropped. I want to show you more trades. We're going to mark up so many trades that you're going to be annoyed. You're going to be pissed off at me. Sorry about my language. Yeah. It's just something that happens and it hurts that you cannot see. Traders cannot see that this is highly manipulated. You need to know this in order to be profitable. It's as simple as that. We swap liquidity over this area. This was the low that created this high. Sorry, this was the high that created this low. And look down here, what's happening. Divergence once again. So this high break of market structure over there. What is in this area? What is in this area? Can somebody give me this in this area? An imbalance sitting here. So an imbalance failed. We came back to fill the imbalance. This is your entry right there. Your stop loss is the candle right down here. If you pull your fib from the low to the high, look at the area price came to. This is why I said to you after the 79, I'm not taking any trade above that. And for those who were asking, Francis, what did you use the 0.94 on your fib level for? 0.94 is my stop loss when I take the trade at 0.79 area. So if I take my entry from here, my stop loss is at the 0.94. Simple as that. And my target, my TP is where I took the high from. That is my TP1. The rest of the TP is in the future, however it comes. Once price gets to this area, this is where I'm going to take my partials. Whatever happens next, I don't care about the trade. Let's show some more. Liquidity grab. This is the high that created the low. Now, this is the break of structure. What is inside this area? Imbalance. So now let's pull the fib. Look where price retraced from. And everybody that knows how to trade supply and demand know that this area is a demand area. So if you take your trade at the 71, your stop loss is just at the wick of the candlestick down here. Your target is here. So if I tell you that you can take a trade 1 to 50 on your own without anybody giving you a setup, would you believe me now? One to 5 is probably your target for the week. You're done. Okay, so before I jumped on this course, somebody was asking Francis, what was the question? Lloyd was asking, is it a sell or a buy? He needed a confirmation for GU. Now let's use every single thing that we have learned. Look at this shape right here. What is significant about this area? Tell me, guys, we're learning. Now you're going to tell me the trade, not me. I want to go a little bit onto the 2-hour time frame. Right, we have the divergence. Liquidity has been taken. However, we don't have a break of market structure. And because we do not have a break of market structure, I expect GU to either keep coming down here and then come up here until I have a GU trade, or continue going up. Simple. I don't have a GU trade. Simple. And the reason why I'm saying that is because if I should pull a fib from here to there, look where the price is retracing from. So it could go higher. It's not confirmed. Why did price reject from that area? Now we can investigate it even further on a smaller time frame, and that's just the point of smaller time frame. What is sitting right here? An institutional candlestick where we have reacted from. And look, on the 1 hour time frame, we still have the same setup. Sweep of liquidity. Let's dive deeper. We're going to break down this area to see what is there. Join me, guys. We're going to decode that area. We swept liquidity. We have broken market structure. Now what do we wait for? Anywhere here we can buy. Simple as that. Anywhere that we can buy. How do we do that? Now we can dive deeper into smaller time frame and see where potentially we can enter a trade from. And this is how you see me going smaller time frame, smaller time frame, smaller time frame. So we feel the imbalance here. Now this institutional candlestick sitting right here. This is the trade for GU. The stop loss there. So your entry there. Stop loss here. If price goes below this area, that's it. You are out of the trade. It means that the pattern is not valid. Your TP1 is here, and TP1 only will give you 1 to 5 ratio, almost 1 to 6. TP2 is up here. And that's 1 to 15. Now let's look at where the entry is sitting. If we pull the fib, I want to see a lot more clear. I don't like seeing this shapes without candles. Look where the entry is sitting. Am I making sense? Somebody might be asking, okay, fine, can I sell from here, from up here to down here? No, you cannot. And the reason why you cannot is because if you look up here, we're creating highs, 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 highs. We haven't broken below any low yet. So it is not complete. We're going to leave it to go and go and go until it breaks the low. Once it breaks the low, then you can find an entry and sell back into this entry. And this is when we do sell to buy, buy to sell trades. What do you do if you see a BOS at the top and bottom? Okay. There cannot be a BOS on the top and at the bottom at the same time on the same trade. One is going to happen before the other. So whichever one that happens first is your trade. Does that make sense? Or whichever one happens, the most recent, what you're looking at on the chart right now is your trade. And guys, mind this. For the fact that we have this trade set up right here does not necessarily mean it's going to play out. The time matters. We know that GBP is a British pair. The British session begins at 8 a.m. in the morning. If I don't see this trade, if I don't see price coming around this area around 8 or in the afternoon in New York session, I'm not going to be taking this trade. I'll pass it. The reason why I use this form of discipline is that I realize that if I take a GBP USD trade in that times, that is when I have a high probability trade. Can you show how you sell to buy? Okay, let's show you an example. Okay, look in this area. Pay attention to this area. We're creating highs, 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 highs. Look at that. We refuse to create a high. I showed you that when something like this happens, it's very significant. Now, the next thing you do is you wait for the break of market structure, which is there. I know it's body, but I'm going to keep it here for you for clarity's sake. We broke the market structure there. Now, my trade, I'll be diving deeper into this area to see where price reversed from. There was a liquidity sweep above this area on the 1 minute time frame. And inside that area is where the institutions are sitting. I do not have an upgraded version of trading view, so I won't be able to go that low to show you the exactly reason why. But look at that. There's definitely an institutional candlestick that moved above that area. They came back into it, tapped into it, and this was your sell entry right there. This sell right here was a sell to buy. Why is it a sell to buy? Because overall on the higher time frame, we know that GU is creating higher highs and what? Higher lows, higher highs and what? Higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. However, you can take a sell trade when all the confirmation is matched up. Am I making sense? So somebody was asking, what was the retracement on that area? This was a probably very deep retracement. I wouldn't have been in this trade by now. It would have probably taken me out. Look at that. We went above my area straight away. It would take me out. It looks like 90. It'll probably go above my 94 area. So I wouldn't consider this trade at all. Let's try it. Let's see. Yeah, it would have tapped me out. So this trade, I would have been out of the trade, but then it was one of the most beautiful trades, as clear as you can see. Everybody who's trading a second time frame could have seen this trade, but I wouldn't have been able to see. I'm only limited to the minutes, 1 minute. And it's good enough for me because it's making me profitable. You don't really need how do you say it? Pro on trading view in order to be profitable, guys. I know so many good traders that do not even have it. Can I have some questions before I move on, please? Any questions? So you expect the DXY to be bearish? Well, I haven't checked the DXY. I'm just looking at GU. So we can have a look on DXY and see what's happening. Let's clear my charts. Let's go on a higher time frame. Even a higher time frame. So if I look on the daily, look at what's happening on DXY. Let's start from here. Liquidity cleared. This was the last low that created this high. So last low that created this high, we broke structure there. Now pull your fib. Look at the area we saw the reversal. Somebody's asking, all right, let's finish DXY. I'll come back to your question because I don't want my focus to be drifted away from this one. See, we broke the structure from here. We swept liquidity, broke the structure, and look at that, 79% drop. That's it. That was what happened on DXY. And since then, another break of market structure, another entry, 50% drop. This is so sweet. And now approaching the very bottom, the thing that we love to see so much, divergence. Now let's look at what's happening here. Liquidity taking, liquidity taking, no break of structure. But we broke liquidity here, and now we are breaking the structure. See, the key thing about this area right now, why I tell people DXY is bullish, DXY is bullish. This is why we broke the structure here. We swept liquidity, and now we're breaking the structure here. So now we know that if I should pull my fib from here to there, we need a DXY at 50%. Oh my God. And look at that. The last candle that formed on Friday is a bullish candle. There is no imbalance around this area, so we're almost getting ready to move up again. However, there is more room. Price could potentially come down. It could. It could come down because we're still in the premium area. We could come to 62. We could come to 70.5. We could go to 79 before the full retracement. But I am telling you for a fact that DXY is bullish. We can dive a little bit deeper and see what is really down here. See, there is an imbalance in here. So to me, that is where my eyes are drawn to. However, look, even here, there was some small bits of imbalance that occurred around this area on the 4-hour time frame. Let's go to 2-hour. Let's go to 2-hour. Because these things, they make me crack. I don't know how you feel about this when you see this stuff, but when I see this stuff, my body is shaking. My eyes are everywhere because I can't believe this is how people make money. And now I can also do the same. Wow. Look at that. The last low, the last high that formed the low was here, right? The last high that formed the low was here, that swept liquidity. And once we broke above that area, look what happened. Pull my fib from here. Look where price reversed from, 79%. And since then, we've been bullish. However, we left an imbalance inside this area. Why? Because after we broke this structure right here, pull fib, this was the high. Again, 50% we left. We broke the structure over here. You might not know why I'm saying break of structure over there. This is the break of structure. It was a high and it retraced. Now, break of structure over here. Look where price reversed. Boom, we left. break of structure over here. To that high. And now look where we are sitting. We're sitting at a 79. And somebody was asking, Francis, how would I know where price is going to reverse? Now look at what is happening at the 79. What is happening? Guys, follow me. Take me with you, please. Take me with you. We are sitting at the 79. Let's go on a smaller time frame and see the clear divergence. Clear divergence. This was the last low, right? The last low that formed. And this is the high. We refuse to create a new low. We refuse to create a new low. So now we break the structure over here, and then we can call this a day. Look where price is sitting. From this low to this high. Let's put an arrow on because you might be confused because there's so many wicks over there. From that high, we retrace 70.5% area, and now we're going up. But how can DXY and GU be bullish at the same time? And that should tell you what sort of manipulation is about to happen in the market. Watch out for it. And for the fact that this was last week's low, this is where we finished last week. Liquidity is sitting here. So beware. For the fact that this was last week's low, beware. And if you look at this wave right here, we are broken structure over here. Right? If you look at this swing over here in the Elliott wave, this is probably we are within the second. So be very careful on what DXY is doing right now. If I were you, I'd probably not take any trade until New York session. And you can see price coming down again because this was last week's low. Like I said to you, liquidity is sitting there. We can dive down, sweep that liquidity before we go up. And by then, that GU buy has occurred. So you need to pay attention and understand what storyline is being built around the sort of trade that you want to take. Let's look at what you just sent us. Can I have a 5 in the chat box if everything is clear so far? I want to see the 5s, guys. If it's not clear, please feel free, let me know. Let me know, because after this call, I want you to be able to be completely independent. Sorry, how I say independent. It's just pull everything together from what we've studied from last week, and that should fix your problem. It should fix all your problem you've been having. So on gold, look at this. Oh my God. Liquidity taken here. No break of structure. Liquidity taken here. No break of structure. Liquidity taken here. Now, break of structure right there. This is not magic. Is it? I'm getting slower because I'm whenever I'm back testing and then I keep seeing more and more of the things that I've learned and the things that I'm using, I get surprised myself. So pardon me if my speech is changing and getting slower and slower. It's just because I'm deepening the stuff as well. I don't know about you on the call right now. What did you say? The BOS is lower. The BOS nothing lower. Let's go on a weekly time frame and you get to see it properly. How is this BOS lower? It's not. We just came to fill the imbalance right here. Look at that. So it's just a confluence. Now you know which imbalance you're taking at. Look at that. Your stop loss is there. Actually there. Because the imbalance finished right there. And I don't know, this is probably a harmonic pattern as well. Yeah, it might be. It might be a harmonic pattern. Gatly. Now Cypher. Cypher. We almost hit the 78% of the entry of the cipher and price just left. And this is what I'm talking about. If you knew this strategy, then you knew exactly where to take this buy from and not get beaten up. So I tell you, this is an extra confirmation. Already you know there is liquidity taken here, break of market structure there, price is retracing for your D entry. Now you know an imbalance is sitting here. This is where your trade is at. So you've been drawn into institutional candlesticks. Now it is good. With all the institutional candlestick, you know, this time around, you're going to identify where liquidity has been taken. If liquidity got taken, was there a break of market structure? If there is a break of market structure, now you're going to wait for the retracement at 50%, 62%, 70.5%, and 79%. Wherever you see an imbalance, you see an institutional candlestick, this is where you're taking your trade from. So it's not by mistake, you know those things already. It's just that you were not filled in with the other gaps. And the reason why I said I'm not sharing this video on YouTube, I'm not going to give it out for free. Because it can't go scot-free just like that. Do I have Nana on the call? I think, oh, Nana is gone. I was going to ask him if he wants us to sell it. Oh my God.
Yeah, I'm here, Francis.
Oh no, he is there. What do you think, Nana?
You are the big man. So you call the shots.
Because this is actually tying all the knots. It's giving you everything. Okay, somebody's saying we should auction it. Yes,
I agree with the auction.
we could auction it.
Hello, Dan. Yeah, I agree with the auction. So we should put on auction and then see how much we can get.
Somebody's
I'll start the bidding.
Somebody's saying, can they start the bidding? Or somebody said, can we buy it from you, sell it to Bounce Back? Nah. Bounce Back can do what they do. I am doing what I'm doing. And until people realize that there are a step further to every single step that you are at, they will never stop learning. You keep learning until things get better and better and better. I wish I wouldn't be hitting stop loss. That is my aim. I wish that if I take 10 trades, at least I can win 9 of them. That is my target. What is your target on the call right now? See, somebody's saying 10 out of 10. But bro, if you want 10 out of 10, you should probably stop sleeping and start doing some proper work. Trust me. Because this thing is crazy, right? Anyway, let's dive deeper and see what gold is doing so far. Now we were creating highs, and all of a sudden, look at the shape that I told you about. We are refusing to create highs. Let's go on smaller time frame. Now we refuse to create highs on gold. So you can see the trend we're showing downside. We came down. This is the area that you confirmed. And this is your alpha stretch, alpha break of structure right here. Now we got the break of market structure there and see what price did. Let's pull the fib from here to there. Let's switch my settings back to smart money. And look at that. Look where price hit and it drops. The same things over and over and over again. We broke the structure, came back down, retraced, and this is your entry, 50%, 62%, 75%, that is 70.5%. On the spot, boom, we're down. So my worst trade I'll be taking is when I take an entry from here and I see it retracing, it's going up and I don't want to be stopped out. All I do is I move my stop loss to the 0.94 area. That is the worst trade that I would take. I know that when price gets there, that is the worst trade I've taken for the whole week. That's it, I'm done. But most of the time, my risk to reward, I am going to identify where the imbalance is, where the institutional candlestick, and play it inside the zones. So if you look around here, look at the institutional candlesticks in right here. So for somebody thinking institutional candle was a waste of time, now you know it wasn't. We came back into the institutional candlestick, boom, and then we dropped. Once again, we broke the structure over here. Structure break. And what happened? We came all the way up, and look at that. We came to fill imbalance. Everybody that knows how to trade supply and demand, you know that this area is a rally-based drop. Entry right there, stop loss right here. So for everybody who's been on Bali's call, is it Bali? Bali Granville? Excuse me if I'm not mentioning the name right, but yeah. Entry there, stop loss there. Perfect. Boom. We sold down. No retracement. In this case, if I put my retracement, nobody should tell you that this retracement went above my area. And that is the reason why I showed you the reason why this trade will play out. The rally base drop, for those that trace, what do you call it? Supply and demand, you know that this area is a supply zone. So you know that this area is not going to hold, that area is not going to hold. Neither here. There is a big imbalance in here. Why do you want to play any of these fibs? Why do you want to play any of these fibs? So if you're a supply and demand trader in this area, this is your best time to shine, because all the gaps has filled in perfectly. All you need is to apply the knowledge you already have with the structures that you have learned this week. You're done. So somebody's asking, when identify a break or market structure, do we consider the candlestick, wick, or we consider the body, please? I only said I'm considering the wicks for clarification's sake, but the body is the break of structure. So please take note of that. Once you go past the body, the wick is just nonsense. And most of the time you see me using the line chart to show the clear break of structure. So in this case, this is the break of structure. That's the break of structure right there, to make it clear for you. What about if imbalance get failed on a smaller time frame but not on the bigger time frame? Do we still have to keep in consideration a retracement on the bigger time frame? Um, I wish you could show me an example of what you're talking about. That would be really nice. Because as it stands, all I see over here is that I see another demand zone sitting right here. So I see gold coming down here. And even this is a very risky trade. For me to take this trade, I want to see, for me to take this trade, I want to be seeing this. And I gave you it. I want to be seeing this small moves. And what do I want to see next? Divergence. A break of structure to the upside, and then I can catch the retracement. I want to see this shape. If I don't get this shape around this area, I'm not buying gold. If I don't see that area, I'm not buying gold. There is more BOS to the right though. I don't know what you're talking about, but yeah. If you look around here, let's look at something here. Liquidity taking. Let's dive deeper into this area and see what's happening here. We swept liquidity, break of market structure. Now, what is about to happen is that we have some more liquidity sitting here. If I pull my fib from here to there, gold could be going bullish right now. Nobody knows. We could be. However, there is an imbalance sitting up here, so we need to pay attention to this area as well. We will dive deeper and see where price is currently going, because now I am to the downside really because of the break of market structure. We broke this structure right here. And once we broke the structure, the problem is we haven't done 50% on the upside. So we could be retracing up. And what is sitting up here? drop base drop. So everybody that knows what do you call it, supply and demand, you know that this area is a supply. If you were on Bali's call, I think 2 weeks ago, or yeah, 2 weeks ago, he made mention of this area as a target, I don't know if anybody on this call was on that call. He did say that. And that is the reason why the drop base drop sitting right here. We could see gold come back up here before the drop. Who knows? However, my focus is just the liquidity that has been taken here where I could get in a trade. So I'm going to go on a smaller time frame and see if I have missed a trade or I'm still in a trade. Actually, in this case, look at that. We broke the structure there. That was the break of structure right there. And look at that. So I can fit from here to there. We did not come into 50%. So there is a trade sitting down here. And that confirms why I have a cipher pattern sitting down here. Do you remember? That confirms why I have a cipher pattern sitting down here, because we did not do that 50%. Let's pull the fib. Look at that again. We are above that with liquidity sitting below that nicely. Nice trade setup right there. We can go smaller time frame and see what's sitting here, imbalance sitting down here. Let's go on smaller time frame. Let's keep diving in. If we can have even a better entry. That's the trade on gold right there. This is when you see me with an eye over here. Now let's pull the fib and see which area we're looking at. 79% area, that is where we're looking at. That would be the closest area. We could have a deeper retracement. Now let's look up here and focus on this trade up here. What happened? Divergence. Right? See how flat price was driving down? We're creating high, low, higher low, higher high, higher low, higher high. And then when we get to this area, what happened? We broke market structure there. And when we broke the market structure, what is inside here? An imbalance right there. We feel the imbalance. And this is why I marked up the chart and I told people I'm selling gold to the D entry. Look at that. Look at where price went, 79% area, and since then we dropped. Again, let's see some more trades. Another break of market structure here. Now we can pull our fib from here to here. Imbalance sitting there. Imbalance fill. And since then, we dropped. And since we dropped, we haven't seen any form of retracement. So this could be our next entry that gold can give us this week. And I told you before we can confirm that this trade is really going to come down, what do we need? Why am I always doing this? What do we need? We need to see divergence as price going up. We want to confirm the divergence. Let's go on a smaller time frame and see if we have it. Yes, we do have divergence on 5 minutes. I personally do not like 5 minutes, especially when it comes to gold. Look at that. We create highs, highs, highs. We refuse to break structure. We came below this area. So now my trade when the market opens is here. My stop loss is there. That is the riskiest trade that I would be taking, to be honest. Because I know for all my confirmations, yes, it lines up perfectly. But then the timing where I'll be taking the trade is not good. The reason why I say my timing is not good is because it's not falling in London, it's not falling in New York. However, for all the confirmations I have, we have the divergence. We refuse to create a high right here, right? And now we came lower. We broke market structure right here. There is an imbalance sitting here. We could come into, and there is an institutional candlestick sitting here. The thing about this area is before this happened, we cleared liquidity here. Right? We cleared liquidity there, but we refused to break market structure there. And we went higher, starting creating more highs. And from here, instead of continuing to create the high, we came down to create low. Right? We came down this area. So on 5 minute time frame, this is your trade right here. Break a market structure, entry at the institutional candlestick. This is how your setup will look like. Stop loss above that candlestick. And your target is here. The reason why I'm putting the target there, is because I cannot confirm that this area is fully broken. Why? Because this was the last low that created the last low right here that created this high. And this high actually broke structure over here. So if you can see that, you can see clearly we broke market structure over there. Let's go on the line chart to make it even clearer. We are above, we broke market structure over there. So it means that if I'm taking the trade, I cannot exaggerate my TP and put my TP all the way down here. That would be wicked. No way. Now I know that I'm taking my trade only for a reasonable amount because you know this could be some sort of distribution schematic going on right now. Who knows? If I were you, I'll start labeling this area to see where price could even come to. We have an imbalance sitting up here. Another target area I could be looking at for gold. Are we good? Are we good, guys? Very much. My best trades. I'm not gonna stress myself on the 5 minutes and all that. I need this form of trades. This sweeps of liquidity. This is the kind of trades that I want. So guys, focus on the higher time frame and catch the big meets. That is where you're gonna make the big monies. So everywhere, every area that there is a retracement happening, you can see this shape going on over and over. If we focus our attention to this area, I want to show you something that happened in this box. Let's go on the 1 hour if we can still pinpoint it. See in that box, what happened? We swept liquidity. We broke market structure. I want to go even lower time frame and show you. Yeah, I don't know if we can reach there. Oh yeah. Look at that. We swept liquidity, and since then, price just dived down. Look at the time that happened. Look at this time, 3:30. Look at the time that this happened. New York cleared high, New York cleared high, and then we dive down. This is why I told you about the times as well. It's very, very important. It plays a key role. Prior to that, we swept liquidity here. And what liquidity is this? Before London, we dived down. London created the low, dived up. New York created the high. We just came down the whole of the consolidation, went above the consolidation, and still price dived down. So many things we could be adding together to cement the setups that we already have, guys. Confluence, confluence, confluence. I don't know if I can show you some more. Look at here. Swept liquidity there. We broke above these structures, came back down again. Look at the area. And since then, we went bullish. Prior to when price was about to go up, we're going to dive deeper. Sorry, let me put my feet back on. This area, guys, follow me. We're going to see what is in there. For those that needs confirmation before you take your trade, this area, I'm going to go 2 time frames lower, and I'm going to show you what is happening in there. Oh no, trading view is not allowing me to go 2 time frames lower. Okay, trading view won't allow me. Let me pick another example. Let's see, maybe we can use this one. Or is it the same area I was looking at? Look, we swept liquidity and look at what we came to do. Oh my God, this was just perfect. This is probably news. This is probably news right there. Can you all see it? Or is it just me being able to spot this thing and nobody else sees it? Let's use this area as an example. We broke the structure right there. We didn't quite get to the 50%. Let's stretch it even higher. Let's see. We didn't quite, but almost there. Almost. And why did we not quite get there? What is sitting here? Rally base, rally. Inside that, we came perfectly, swept into that area. And since then, price left. So for anybody thinking about, oh, gold, how is gold going to fit in? How is gold going to fit in? Gold does the same thing compared to every other pair. I have 12 minutes left because I decided to do 2 hours. I am going to leave the last 12 minutes for Q&A, questions and answers. So if you have any question, please, you can go ahead and ask. Then I can finish today. Can you show what mitigation looks like? Mitigation looks like this. I'm not going to go far. Does that answer your question? Okay, so this is the institutional candlestick sitting here. That came down to sweep liquidity down here. Instead, price need to reverse of that. Price went above it, came back to test it behind the back, and that was a trade. Does that answer your question now? The question came at the right, just when I had a perfect example sitting in front of me. So all I'm trying to say is this candle right here was the last high that broke this low. So this is an institutional candlestick. Instead of price reversing off this area, price went through that area. We violated the institutional candlestick. So a violated institutional candlestick is your mitigation candle. And now, if it is a mitigation candle, its function is to act as a support area when price come back to that area. So this candlestick price came back on top of it, bounced off it, and since then, gold went higher. Is it properly explained now? Thank you. Mitigation can happen at the wick of the candle, body of the candle, or imbalance. So if you want to set a pending order, where would you do it? Just at the 50% to make sure. That's it. I would always put it at the 50%. So let's use this as an example. So look at that, keeping the entry price at the 50% and your stop loss below the institutional candlestick. Look at how good that was. Hit the entry and boom, left. So, okay, if you looking for retracement price and price not at 50%, but you have IC and supply and demand area mapped, it is a confluence we can enter as we have other confirmations. Yes, you can do that. The only problem with those trades is that you need to understand how to trade supply and demand. Supply and demand have a specific areas they take their entries and specific areas where they keep their stop losses. If you don't know that, you might be having way bigger stop loss and way bigger risk. So if I were you right now trying to decode this very way of trading, I would go straight and find a reason to learn supply and demand to add to my arsenal before I'll use that. If you cannot learn that now and you want to focus on this ones, please focus on this one with institutional candlesticks. If price do not retrace at the 50%, leave that trade to go. You can't take all the trade anyway. You can't. Any more questions, guys? Sometimes the MC zone gets mitigated again. Yes. If price do not go into the 50% area, in this case, the only reason why it got mitigated again was because it was FU in people. That wasn't the point. So if I look around this area, this was the institutional candlestick, right? Let's dive deeper into this area and see what happened. So this area, liquidity got taken, break of market structure. Now this is the institutional candlestick. And this was why institutions were coming to this area. That was the reason. So everybody who put their stop loss here, what happened to you? You got FU'd. Simple as that. We took your stop loss and price went. You're not wrong. It's not because they wanted to mitigate this again. Guys, they know you're learning how to trade the way they do. So sometimes they do this as well. So we also get taken out. Right? So that was just a game that happened over here. They knew they were coming back into that institutional candlestick. Perfect setup. Every institutional trader was looking around this area. How many institutional traders do you think could be taking out this trade? Tons of thousands, including some of the banks themselves. Whoever did this is very rich, very, very rich, and very, very, I don't want to use the word, but you know this type of people. They're not right in the head. They can kill people anyhow. But yeah, that's what happens. That's what happens every single time in the market. And everywhere liquidity is taken is the same story every single day. So now on this basis, somebody might be asking, so how then do I take a trade in a day? All the time, look for areas of liquidity. All the time. Let's try and pick a random pair. And I'll show you something before we finish. Well, I'm supposed to finish now. So let's have a look at this. In this case, if I look at this right here, this is my area of liquidity. I'm going to mark it up. My next area of liquidity is there. Next area of liquidity is here. Pay attention to this, guys. And the next area of liquidity is there. These are the clear and obvious areas that I can see liquidity sitting, right? You come to the chart and you mark up all this and you're waiting for where price will sweep the liquidity first. Bear in mind, looking at this chart right here, let's go on a higher time frame. Looking at this chart right here, we were going higher, up, down, up, down, up, down, up. And we created this up. This is the area that we broke the structure to the downside. That's the area we broke the structure to the downside. And when we broke the structure to the downside, look at that. If I should pull my fib from here to there, I do not have the 50%. It means that there is something up here that price could be coming to. There is an institutional candlestick sitting here at the 50% area. And there is an institutional candlestick sitting here at the 79% area. So now this is my entry right there. I'm going to take this entry. Yes, but you're seeing single top. I told you swing highs and swing lows. The reason why swing high is a swing high and price drop from there is because somebody sold from that area. So their stop loss is sitting there. Somebody sold from here to cause price to move down. Somebody bought from here to cause price to move up. In that case, there is liquidity here. So now we have the picture that we have broken the market structure to the downside. And now if we pull our fib from here to here, we have less than 50%. So now we can pull our fib from there to here. And we want the 79% area. The institutional candlestick sitting right here as our entry and the stop loss above that area. That is the trade that you're going to have on EU, the best trade that you can have. I'm not going to lie to you. This area is high probability trade. If you get this trade, you win it. Why am I keeping moving on this stuff? That's it. And what is lining up to this right here? What pattern do we have right here, guys? We have a cipher. So now we know the entry is at 78.6 area. And look at that, liquidity sitting here, liquidity sitting here, liquidity sitting here, institutional candlesticks sitting here. And that is your entry, simple. And if you get this sell, remember where we are. We are at the alpha breakout structure. So if you get this sell, this is the best meat that you have. Simple. The best meat that you have. If you look at the wave over here, this is the first wave. Second wave we are in right now. If I am wanting to take a trade from here now, my attention is within this leg right here. Let's go on smaller time frame. Now the break of market structure happened here. So now everywhere in this area, if I pull my fib from here, if I pull my fib from here, I want price 50%, 62%, 70.5%, 79%. That's the area we're looking to buy price. So we're going to find reasons to get entries. And what is the reason? We're going to be identifying institutional candlestick imbalances around this area. It's not clean at all. The price actions are really terrible. But we know this area, we have this area sitting right here. This area where liquidity got taken, went higher, came down. So I would be looking around this area if EU come back here for a potential buy up. Now let's throw some fib on and see where it is. Look where it's sitting, 75, 70.5 area and 79 area. Oh, the price is actually hitting the quarter level area as well. So you know some more confluences you can actually put on. Now to look for the sell, this is when we can do a sell to buy. We want to see divergence. We want to see the divergence. And after the divergence, what's the next thing that we want to see? We want to see the break of structure. Still, we haven't broken the structure yet. So we want to see a break of structure there. If price breaks the structure here, we want to see price come down here. Do a retracement like that. And now we can sell from there to here. Which I doubt this is going to happen. Why? Because this was last week's close. So I expect price to actually sweep the liquidity up here and continue with the divergence for a little bit. Before London session, we can expect the sell. London can give us a sell. If that happens, if this should happen, I want to see some sort of Asian consolidation all around this area. Some sideways movement the whole of tonight and probably around London session. I want to see a sweep of liquidity and price will drop back down into this area and continue with the buy. So this is how you can pick up your trades as a day trader. Where do you want to enter the market? Pick relevant areas. It's the same as GU as well, isn't it? So now you know what is happening. If the same as GU, you can go on AU as well and you can see the same structure. You can go on NU as well and you can see the same structure. If you go to USD CAD, you will see the opposite structure. If you go to USD JPY, you see the opposite structure. And this is how you can have so many trades by analyzing just one setup. My time is up. Well, I'm gonna leave. My time is up. I'm gonna leave the next 5 minutes to Nana if he's got anything to say. Then we will finish up. So I still have Nana. Hey, he's hiding somewhere, but I don't know what he's doing. Probably gone. But yeah, I'm finishing off, and I hope I helped. And for everyone that contributed in getting me a premium Zoom, thank you so much. It has been a brilliant time, straightforward. Like I don't know, I'm feeling so good right now. I could go on and on and on and on and on. Thank you all so much. I just hope that this session wasn't just words, but you have actually taken some value home. Trust me, if you go back and practice this skill, you would realize so many times how you've gone in trades. I appreciate guys. I'm so excited about this. I don't know if somebody here on this call is excited as I am. Come on, run, go and do some markup, post in the group chat. Let's discuss, let's take some good trades and make some more wins. Can we get a copy of this call to refer to? We think about it, guys. I'll let you know in the group chat what we come up with. Somebody said we should auction it. So whoever is willing to buy, then we can sell it to that person and that person can distribute it. That is off record. That's off record.